Today I'm gonna be talking about 3 different types of order blocks. So the last 2 videos that I have created were simple breakdowns on how to actually identify order blocks in the markets and how to get in using top-down analysis, and I really went in depth there on the charts and everything, so I really recommend watching that video. But today what we're going to be talking about is 3 different types of order blocks. The last video I mainly talked about just standard order blocks, which is the most popular type of order block, and it is the one that you'll actually see across multiple platforms on social media. But today I'm going to be really giving you guys some gems on smart money concepts and 3 different types of order blocks that you want to be looking at in the near future. So this is basically what it's going to do to your technical analysis, is actually give you more knowledge and more perception of actually finding things in the charts, which does increase your awareness against the consensus, which is exactly what you want. So without further ado, let's get started. I do want you guys to write notes because it's very compressed with information. Although if you are advanced and you're watching this just to simply revise, go ahead and skim through this video on 2x if you'd like. I don't really care. So just as a precursor, this is I'm going to talk about the very difference between retail logic and smart money concept institutional trading logic. Once in a trending market, retail traders look at the highs and lows as support and resistance, and we look at highs and lows as point of interests and where liquidity is being taken out. So that's just exactly what I wanted to pinpoint right before we step into this, because it's really a different perspective. We got different lenses from the rest of the market participants. So let's go ahead and get started. So first order block, the standard order block, really what it is very simple. It's the last up candle before they break a structure towards the downside. So vice versa. So if the market's trending towards the upside, it creates a high and then creates a bullish candle before the leg towards the downside, which then breaks structure. So what we want to do is actually identify the last up candle before they break a structure, which is extremely simple. And there's 3 ways to maybe go by this. So the very first way you can enter is actually going from the wick to the top and then entering off the wick and putting your stop loss at the top. What I mean about the top is that you see this high over here, that's the top. So if we were going to use our 50% gone box entry, I would identify this wick and the top, send it across, and then we will enter off the 50% region of this whole move, which is the imbalance of what's going on here. Another way you can enter is off the candle. So you guys can go ahead and actually place a horizontal ray right onto the candle of this bullish candle, which is blue, and then we can go ahead and actually sell it towards the downside. So that's basically how you want to go about things. So you have the wick, candle, and 50% gone. And I did misspell wick over there, so don't worry, I know how to spell wick. So let's go ahead and get started with the second type of order block, which is called the engulfed order block. The last candle has to be covered by the next one. So it's very similar to the previous order block, although this one, it doesn't really matter which color of the candle it is, which color of the body. So it doesn't really matter if it is a inside bar candle, a up down candle, the whole candle must be engulfed by the next one. With this order block applied on the charts, it's going to extremely refine your trading. So as you guys can see here, there's 2 ways you want to go about this. You want to either enter off of the body of the candlestick, or you want to enter off of the 50% gone. So I made another mistake here. I should have put down wick. I should have put down body instead of the candle, but it doesn't really matter because they do generally essentially mean the same thing. So let's go ahead and see what's going on here. The reason why I don't enter off the wick is due to, look how big the stop loss range is here. So the stop loss range is extremely big, and it would be just not very intelligent to actually enter off there. And there is also liquidity being swept there. So what you want to do is actually identify the candlestick, because where the bodies are is exactly where the institutions want price to close and such. So if you can go ahead and target the body instead, it's going to really refine your trading. Another way to actually identify it is that if you're not very confident within putting your entry on the body, you can go ahead and find the 50% imbalance region, where price actually finds a stall and goes ahead and goes from distribution to accumulation, and it usually happens at an equilibrium. So a 50% imbalance is a great way to actually go about things. So let's go ahead and actually talk about the next order block. So the next order block is called the breaker block. The breaker block is something that I don't usually see a lot of individuals trade, because they actually don't really trust it. They trust the most popular things. But I'm gonna go ahead and talk about something extremely important. So breaker blocks usually work only with inefficiencies, voids, imbalances, whatever you want to call them, and it's basically this candle right here where price didn't leave wicks, and it's very bullish, very strong, huge momentum, and it's basically a lot of orders need to be picked up here so that price can collect that imbalance. So if I give you guys another example really quickly, we have a imbalance over here. So we have a bullish move, and then price comes 50% region of that imbalance and collects it. We have a big bearish move, price comes in, collects this imbalance, and drives towards downside. And that's just quick examples. There's also imbalance recollections, but it happens ever so fast on the smaller time frames. So it'll just be a wick on the higher time frame left behind. So let's go ahead and further dissect what is a breaker block. So as I said before, breaker blocks only work in efficiency setups and setups that need a imbalance which needs to be collected. So a previous order block that has been broken through with momentum. So as you guys can see, we had probably a little range being created here and lows being created and a supply zone being created. That supply zone got absolutely demolished by probably some fundamental changes. So if the markets are actually very strong and it is close to the right time sessions, which is London, New York crossover, or even Tokyo, and there are FOMC meetings coming up, a lot of fundamental announcements coming out, you want to look at identifying these breaker blocks. But if markets are moving quite slow, it is still smart to go ahead and identify the order blocks the standard way. But if you want to go from a breaker structure and a retest perspective, you can go ahead and use these order blocks as breaker blocks through the other side while it's collecting momentum inefficiencies only, because it only works that way. So there's really three ways to go about this. You can go ahead and actually look at this up candle. You can see that there's a wick left behind, and then we have a huge momentum push. So we want to go ahead and actually put a horizontal ray there. It goes across our imbalance, and we can go ahead and actually identify a trade there. We can go ahead and identify this whole range from the wicks, and then go ahead and identify the 50% range of that whole rectangle, which is a gone box entry. Or we can go ahead and actually just identify the bodies of this of this base, spread it across just like we have right here in white, and we can enter off of the very top of this instead of the 50% like the other entries. So I hope you guys actually make sense of this. I know it is very condensed with information, which is why I recommended you guys to write notes, but feel free to ask me any questions if you have any, and if you'd like to, you can recommend some future videos. I'd be more than happy to create that for you. So thank you guys for listening, and have a great day.